What up, guys? Jason Guyman here with PressureWashHelp.com, and today I have Mr. Dan. Mr. Dan is a bookkeeper, and we're going to talk about how to make money, and not just how to make money, but how to make sure that we're being profitable, make sure that we're not doing stupid stuff with it. Just because we make money doesn't mean that we need to spend it all in one go. And so that is what I want to talk about because, this is what can make or break. Following this stuff here that we're going to talk about tonight, this is what's going to make sure that you're in business over year after year after year after year. And whether we're going to grow it to sell it or grow it to whatever we're, to be successful, this is some things that we got to look at to make sure that we are being successful at the end of the day. I got to turn this mirror off because when I'm looking the wrong way, it's making me look the opposite way. So, Dan, tell me who you are and where, about your family and all that good stuff.
All the background stuff. Yeah, thanks for having me, Jason. It's cool you're on Bookkeeping Beer and BS this last Wednesday on our Facebook Live that we do. Now we get to do it again and dive into some finance stuff tonight, and then I get to see you in a few days in Nashville. So we're like running the gauntlet here. We'll be sick of each other. We'll either really like each other after all this, or we'll just be totally sick of each other.
Jeremy Wilson said, "Blue skies in the house."
Booyah, booyah. So yeah, Dan Plata with Blue Skies Services. So I'll get into the business stuff. And we got a lot of goofy things going on. But the reason why we do these things, and you and I jumped on a little earlier here, and we are just talking about our kids. And it kind of all comes back to our family. And Josh Latimer always says, he's mostly just trying to impress his wife, and make the family proud, right? And so I think that just so rings true. It's we could go get a job and work in the corporate world, but then you're just doing somebody else's work, and it's way more fun to create your own and do your own thing and try to show off for your wife while you do it. So I'm married, 2 little kids, a 4-year-old and 2-year-old daughter. We'll see if we ever, we're kind of at that, do you have a third one or not? Should we not? So we're not pulling the plug on it, but as a finance guy, I don't know if I want to have to get a minivan and, redo all my assets for a third car seat. We'll see. But yeah, so Blue Sky Services. So we've been around since about 2010. We got into the business by buying a company called Blue Skies Window Washing in Minneapolis. And they were doing, the origin story's been told a few times, but basically they were doing $60,000 a year in revenue thereabouts. They had 2 employees, one that could go on ladders and one that legally or, for weight restriction purposes couldn't go on ladders. And the guy that couldn't was the only one that showed up on day one with his beer drinking cutoff t-shirt on. So he didn't make it too long with the business, but we started with a small window cleaning company, acquired other companies along the way. And so now we have 2 different window cleaning companies, one in your backyard in Cincinnati. And then we have 3 home cleaning companies, one in Cincinnati, one in Cleveland, one in St. Louis. And just in the last few years, we had this administrative team in the background that served all of our operating teams. And so we took that and started doing that for external clients. And the things that scaled the best for us that we could do for our locations, and therefore we could do for external clients as well, was our recruiting and our bookkeeping and our marketing. And obviously, I got the Bookkeeping Beer and BS up behind me because I'm the bookkeeping nerd of the group. But for me, it's like you and I talked about the other day, it's all about just helping people and trying to especially folks that are new to the industry and maybe leaving a corporate job and trying to figure out what to be focused on and what are the first few things to do. And so using my finance powers, hopefully I'm just trying to provide as much information and content and coaching as I can to help people make good business decisions, avoid the pitfalls, and make a lot of money faster, hopefully.
Awesome. So when you were doing did you ever do any pressure washing, or was you always just kind of the books kind of person?
So I joined Blue Skies officially full time back in 2016. But I had been for probably the 5 years before that doing bookkeeping stuff and merger and acquisition stuff. And kind of had like the game plan eventually to leave my corporate gig and full-time kind of replace Mike Dulke, who was our CEO at the time and still one of our business partners. I've sprayed a couple houses. I totally oxidized or hit one that had some massive oxidation. And so that's like the one house that I've pressure washed. I botched because the ratio was too strong. So they don't let me do that anymore. But, we do more window cleaning, I'll say, than pressure washing in our couple of locations. But obviously, like more and more, the pressure washing, the soft washing, like gets to be a little bit bigger chunk of our portfolio every year. But actually, when I first started, the first thing that we did that was like, hey, Dan, here's your thing, was we started a home cleaning business in Minneapolis. Everything we had in our business portfolio up to that point we had bought. And we had never said we're going to launch a business from the ground up, but largely because you just have to have like an owner mentality to do that, right? You can't just hire somebody to do that. It usually needs to be an owner, and so we're like, yeah, let's build a business model of how we can start one from scratch. That way, as we grow, if we ever have somebody that's like outgrowing their role and they want to give it a shot, we have a model for how we're going to launch a business from nothing. And so we did that. And for almost 2 years, I was operating that and, running the rest of the business. And we grew that to about $250,000 of recurring residential cleaning, which was a nice little business, but it was such a distraction for me. When you're running any business that's $250,000, we had 6 employees and we just struggled to find that manager. And in our conversation tonight, I'm sure we'll circle back to some of like the key learnings. And so this one won't be the last time we talk to this, but I just could not find a manager, which meant like there was one Christmas, I don't know if it was Christmas Eve. It might have been Christmas Eve. My wife was 6 months pregnant with our first kiddo, and she was out helping me clean because 3 of our 6 employees were out sick, quote, out sick. And so it's just like the toll of that, and which is fine if you're running that business and that's everything you got going on. But we had 4 other businesses that I needed to run, and then I'm out scrubbing toilets on Christmas Eve with my pregnant wife. We're like, this business isn't fit for somebody trying to run a few other businesses too. So we ended up selling it just so I could focus on growing the bigger portfolio.
So why do we need first off, I didn't know this the other day, but tell me first off, what is a bookkeeper? Different than a CPA or, just a person of a data entry. What is the purpose of a bookkeeper?
To me, it's all about like having a financial business coach, if you will. Somebody that's like looking after what's actually happening in the business and helping you make better decisions. So there's 3 accounting roles that need to get done in your business. Bookkeeping is only one of them. So kind of at the onset, the daily task stuff, somebody in your business, usually you if you're just starting out, is doing accounts payable, accounts receivable, invoicing clients and depositing the money, and running payroll. So there's a group of accounting tasks that are fit for somebody that is just responsible and consistent and can run a process, but it doesn't need to be an accountant. You don't need any accounting knowledge or background to be able to do those things. You just have to be trustworthy and reliable and, do a little bit of problem solving. At the other extreme, you have your CPA, and you need a lot of education to be able to do that. And you're very tax focused. And your work is really like once a year in a lot of cases, or a little bit here and there, but your consulting related stuff from a CPA is all about tax planning related stuff. CPAs in general, and for some reason, like this is a service industry thing, is most CPAs don't understand how our businesses work and how they make money. So they end up being not great financial coaches for us because they just don't quite get how we trade labor for time. To us, it's like, of course, we send somebody out, it takes this much time, it costs this. That's how we make our money. Like we're not making widgets, right? We're selling labor. And so the bookkeeper role to me is having somebody that is doing your QuickBooks for you on an ongoing basis, but on a really timely manner, not once a month or once a quarter, but like every week, so you have up-to-date information. and giving you a good way to like roll that up into the right buckets to make decisions with. Because at the end of the day, like if all you do with your QuickBooks and your P&L is give it to your CPA to do tax purposes, then you might as well just like give them your bank statements. You don't need to do all the bookkeeping work if it's just for tax purposes.
All right. So what's a P&L?
P&L is a profit and loss statement, so it measures your results over a period of time. And so it's kind of like it's your report card. It's how you did during this period of time. So I think like having it in a structure that is broken down into the decisions that you need to make is super important. But B, if you're not putting the data in the right spots or not doing it in a timely manner, then you don't have the decision-making power that you're getting from it anyway. So you're kind of missing the point of the books.
So what all is on this P&L?
Well, I'll break it down into like how we would structure it for our bookkeeping clients and why we do it that way. So obviously the first thing is your revenue, how much money you're bringing in. But every time you go do a job, you've got all the expenses that go along with that.
You do? I thought you just got all this money and it just showed up there, right?
You just put it in your pocket and then, tell people how much you're making. Yeah. Then you brag on Facebook a little bit. No, you nailed it. Are we done? Are we done with the conversation? We got it wrapped up right there. So you got your top line revenue, right? You've got groups of expenses, and I'll kind of get into the naming conventions here in a sec. But basically, you've got the expenses that are going out the door every time you're doing a job. You've got obviously the expenses that are going out the door to bring clients in and to make the lead transition or transaction process look pretty. You've got the people that you're paying to do that work of like converting clients, and then after that, you still have like the expenses that don't really generate revenue for you, but you still like need them to run a business, like maybe a shop, maybe insurance, maybe you borrowed money, you've got some interest expenses, maybe you take your team out or buy courses or whatever, and so you've got overhead expenses that don't necessarily immediately generate revenue, but still need to be tracked and go somewhere. So those, what I just explained, are kind of like the decision-making buckets that we group expenses into for our clients. So the first one is cost of goods sold. And that, like I said, that's anything that you're spending when you go out and do a job. You can say, I did this job, therefore I incurred these expenses. So things like labor, supplies, gas to run the equipment or get you there in your truck. The next one, marketing, is pretty obvious. That would be the money you're spending on ads to get clients. But I'd even say it's the website or the software that you use to make it easy for those clients to interact with you. It's the person you pay to do your SEO. It's the charitable donations you make or the client gifts that you do. It's anything to build your brand or just bring leads in general. And that next bucket, the admin bucket is what we call it, is the people that you're paying to convert those leads into clients. Somebody's going out to sell them, or somebody's answering the phone if they have an issue, right, and doing the customer service stuff, or the person that we talked about right at the beginning that's doing your accounting manager type of things, the payroll, the AP, the AR stuff. So last is the overhead, the expenses that don't generate revenue for you, but you still kind of need them to run your business. And actually, this area, I'll say, admin. A lot of people go wrong on admin because we're generally pretty good about managing our cost of goods sold. Like we can see, because so many of us have been out in the field, we just know when the team is inefficient and when they're not. So if they're being efficient, we can kind of tell, and if they're being inefficient, we can tell that too. So we're pretty good about managing that spend. We just understand it. The admin spend is hard to measure, or hard to manage, because it's hard to see somebody working at a computer and be like, oh, they're not being efficient, right? Every admin person in the world's like, I'm super busy. I'm,
swamped.
But busy with what? Like, and it's harder to track their productivity. Like the metrics when somebody's out in the field are pretty easy. Like, how much revenue did you produce today, and did we get complaints on it or not? Pretty easy to tell if they did a good job. Harder to tell if your admin did a good job. And so I see people get tripped up on that expense bucket quite a bit because it just feels like you need more people because everybody's so busy all the time. So that's a risky one as we grow. That overhead bucket too can be kind of goofy because there's two different types of decisions that you make within those overhead expenses, and generally we're bad at one or the other. So one bucket of overhead expenses would be fixed overhead expenses, where you're locking something in for a period of time. It's like a negotiating decision or a contracting decision. Your rent, your insurance, your interest rates, maybe some software that you buy. Like when you sign up for something and you're just kind of stuck with it and you revisit it once a year maybe. So those are big once a year types of decisions. Some people are good at those. Some people are just like, whatever, like just sign me up for that thing. And then they never revisit it, and those expenses get out of control. So those are fixed expenses, a measure of your contracting, negotiating skills, I'll say.
So how often, like, so you're saying that you should go back and, renegotiate and see like different things of like tax or insurance and stuff like that. How often should we do that? Is that something we need to do once a year, once every 2 years, or?
I think there's two components to it. And not just for those costs. I think this works for everything. But I'd say revisit it quarterly, just so you have tabs on it, and then when, because not everything's going to expire at the same point in time. So if you just revisit it once a year, you're going to be like, oh shit, last month was my deadline to like look at this health insurance thing or that. Or you might be 11 months away from your opportunity to redo something. And then by the time 11 months is up, you're going to forget about it anyway. And then, that vicious cycle will go on. The other reason why it's good to look at quarterly is because I shouldn't even say you for sure have signed up for something that you're still paying for and you've forgotten about. so at BBB, we do that we're going to be at this week. We do a P&L detail review where we literally like go through our P&L detail of where did we spend money in these different buckets, and dues and subscriptions and software are ones that we always look at, because that's where the shit lands that you just signed up for and then you totally forgot that you're paying us $50 a month.
Shh, don't say that too much now. No, I agree 100%. That is definitely something we need to look at. Anywhere that, if we're not using something, then get rid of it. I've done it many times. I bought something, never used it, and keep paying for it. But if you're using it, then it's a different story. But if we're not using it, get rid of it at the end of the day. But and quarterly, I know that sounds hard for a lot of people. It's not going to be easy just to be like, oh, I got to do this fun thing of bookkeeping, and all that kind of stuff, doing that. By having a bookkeeper, is this something that you'll be able to take everything to a CPA? Do you need a CPA? That kind of stuff.
Yeah, like you always need a CPA. I'm not a CPA. I don't want to be a CPA. I studied the finance equivalent of a CPA, which is the CFA. I'm too cheap to pay for the letters, and I passed all the exams. And I was like, well, like I did what I said I would do. But like to me, like that's what I get my jollies on, is the decision making side of it. Like I could really care less about the taxes unless it means more dollars in or out of my pocket. But you need a CPA for that sort of stuff. Even my own personal taxes this year, I think I was telling you about this. Like I had them pretty much done. I do them myself because I'm an accountant. I should be able to do my own taxes, right? Had them done. There was one thing that I couldn't do on my tax software that I was using, and it was like it was going to cost me $800 if I didn't like have access to this one form that I did. So I like hit my CPA up and I was like, hey Brian, can you like file my taxes for me, because I have this $800 credit from something from our business that I can't put into TaxSlayer that I was using. And he's like, yeah, just like send everything over to me. And he got my taxes. He's like, well, I got that in there for you, but you also missed this thing and that thing and that thing. So you'll get $1,800 back. And I was like, man, I was about to pay $600. So like having a CPA that understands, and that was like my personal taxes, right? So the more complex your business situation gets, somebody's got to be looking at that for you, because yeah, you're going to have to pay them, but generally they'll save you a lot more headache and time and money than it'll cost you to pay them. So for sure you need that. But the beauty of having a good bookkeeper is when you get to the year end, instead of being like, oh gosh, I need to like scramble and whip everything together here, you're pretty much like, hey CPA, here's my QuickBooks file.
Here you go.
Make my depreciation entries for the all right. And a good bookkeeper, like one thing we had to tell all of our clients is like, feel free to put us in touch with your CPA, because your CPA is probably going to send you some questions. And you're gonna be like, French, Spanish, what language you're speaking, but it's not one that I know, because accounting is, it's just a bunch of made-up terms by people that didn't want you to know what they were talking about, I think. So having a bookkeeper that understands what a CPA is asking for and can like do some of that legwork for you and be in the loop, again, just like saves you the headache from feeling like you're on an island. So I think got to have a good one, but you also should have a good bookkeeper too, I feel like.
100%, 100%. Somebody asked, how much do you need to make to before you get a CPA? And I think that it's something that is important for, obviously if you're just starting out, it's one thing, but if you get going, you really need to have a CPA. They'll save you more money in the end than if you don't have one.
Yeah, I mean, if you have a business and it's a separate, if it's an LLC or an entity separate of yourself, which it should be if you're doing it for more than a hobby, man, I just get a CPA. Find one that you trust, but there's no level of making enough money where you're like, oh, now's the time. I mean, it's like the time is you have a business, therefore you need a CPA, I think.
Well, and it's one thing that I always say too, there's one thing that'll make you go to jail in this here, and it's not filing your taxes right or doing something stupid with your taxes. So unless you like Bubba, I would highly suggest you make sure that is right at the end of the day.
Yeah. And I mean, that's like they're legally signing off on your taxes. Like they are taking that legal burden. And just like we do in our business, the reason why we set up an LLC is to try to like protect ourselves, right? So for a few $100, just protect yourself. Like Pay somebody to sign off on those. And again, they'll probably save you more money anyway.
Awesome. So Dan, what are some things that make businesses profitable versus not profitable?
Man, I was talking to somebody the other day that was just starting up, and I was coaching them along their primary expenses right now are just the labor to do the work, right? Like they're out in the field and they've got somebody helping them. They don't really have to worry about the overhead. So they're asking me like, what are the top 3 things I really need to be like thinking about to get my expenses right? And it was really like your cost of goods sold, your cost of goods sold, and your cost of goods sold. Like they're not spending a ton on marketing. They're doing like flyers and like very like boots on the ground. They're trading their time for the marketing. They're not like doing a bunch of big spends. They're trading their time by answering the phone themselves while they're out in the field. So they don't have big expenses there. They don't have a big office or anything like that. So their expenses are literally just like going out and doing the work. The biggest thing I see is there's two big things in cost of goods sold. One is always making sure that you pay your employees the same way that you get paid, so that you de-risk. And I'll explain what I mean by that. But the idea being de-risk your P&L right from the get-go. That if your customers pay you for the hours of time that you spend there, pay your employee by hour. If your customers pay you by anything that's like square footage or piece rate, whatever it is that's like a fixed dollar amount for cleaning so much stuff, then you can't pay your people hourly, because just because the price was X and now this cleaner might drag their feet or be on a bad day and they take 6 hours instead of 3 hours, like you have a ton of risk. You're exposed. So when your price is locked in based on like a piece rate or a square footage or whatever it is, then paying commission or like, hey, for every square foot you do, you make this much money. Some sort of thing that ties directly to how you price your customer, so that you don't have a mismatch there. If you have a mismatch in how your customer pays you and how you pay your employees, you just open up a ton of risk for yourself that you don't need to have. And in general in our industry, whether you're pressure washing or cleaning windows or cleaning houses or mowing lawns or whatever, very few of us charge hourly anymore. People used to, but I feel like now it's mostly square footage based some way, somehow. So like you really got to be paying your guys commission, your guys or your girls, whoever's out in the field, commission, piece rate, something that aligns with exactly how you bill your clients. so that if you do $1,000 worth of work, your labor is going to be $250 every time, no more, no less. It just saves you so like getting that set up right from the beginning saves you so much time and headache and like having to worry about if you're making money on that job or not. So that'd be the first thing, getting the labor paid right. The second thing would be understanding that equipment doesn't make money.
What? I thought the biggest, shiniest stuff made the most money. I thought you had to have a $30,000 rig to make money on this stuff.
Only if it tucks you in at night too, I guess, because that's otherwise you're going to be laying there thinking about, man, I got that big rig. I better be like, I can't have that thing out of production, right? Like thing better be working 24/7. So I like it's the guy or gal that's out there running the equipment is the only thing making you money. So like maintenance on them is the most important part, like mental maintenance for them and employee engagement stuff. Equipment is a tool that we use to get the job done, but it's not an investment in our growth. We have a few rules that we use when we buy equipment. The first one is we never buy it until we have like the job on the schedule that requires it, and that job has to pay for that piece of equipment. So like, yeah, if we have so much work out there and a bunch of little jobs, like maybe we'll go get another vehicle, or maybe we'll go get another pressure washer or whatever it is, or a water fed pole, whatever we're doing. But making sure that the work is already on the schedule that pays for that piece of equipment. Like book yourself 8 weeks out if you have to, but know that that work is locked in so that the equipment is already paid for when you buy it. Because like for most of us, we don't understand. Not that we don't understand. We don't have the time to like dig into the interest rate off on the financing thing that we get. And nobody's going to give us a good rate on things for the most part. So like making sure you've got it paid for and like you're not getting screwed over on your financing is super, 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 super important. Equipment doesn't make you money. The people make you money. The equipment's just the thing that they're using. So
I like the one thing you were saying about the pay and that kind of stuff. We paid our guys hourly. We paid our guys, percentage and all that. And the thing that a lot of people don't understand, that even if you're paying hourly, let's go down that road of paying hourly, because you might say, well, he's only getting 5 hours of overtime a week or 10 hours of overtime a week. How much is that really coming out of your pocket at the bottom line at that point? Because if you're working 5 hours overtime, 10 hours overtime, obviously the pay went to time and a half. You're paying all your taxes on that. You're paying payroll taxes on that. So when people don't realize that, well, we don't keep them at that 40 hours. We allow them to work over to try to get this stuff done. At the end, are we really making money at that point? Does that make sense?
So for two reasons, it's a double whammy. You're kind of screwing yourself over. So one is the overtime and the time and a half pay and the extra payroll taxes on it. Compared to if you're paying commission, you don't have to pay overtime. You can't I won't get the IRS or Department of Labor rule correct. But if they're commission-based pay, overtime is not part of that calculation. You can still calculate. We do an hourly minimum. There's some rules around it, so don't just say, oh, I don't need to worry about overtime. There's some specific rules that you need to meet. But in our business, we pay a minimum of $15 an hour. So if they're not making enough commission, we do both calculations. Well, how much was their commission? How much would this hourly minimum be? We pay the higher of the two. And if they work 50 hours, we do that hourly calculation with the overtime in there so that they still feel like. But, I mean, if they're working that much and we're that busy, they're going to make $30 an hour damn near commission-wise if they're cranking out that much work, we're that busy. So I think that's one side of it. The other side of it is, I'll say, I have a few examples of this where we've helped people go from hourly pay to commission-based pay, and their productivity increases by about 40%. Which is how, right? It just seems no, my guys work hard, right? I've seen one guy in the pressure washing space where I was like, I don't know if I would change anything. He pays hourly, but just the way the way he's managing and working it, his P&L is perfect. He has the risk that if his productivity goes down, but I said, man, the old adage, if it ain't broke, don't fix it. but in general, everybody that we've seen that was, struggling managing their cost of goods sold, the minute they switched to commission-based pay, their productivity went up about 40%. The guy that was doing $500 a day by himself is now doing like $700 a day by himself.
Really? I can believe that, though, because I used to have a guy that, I could load this sucker up. I could give him anything he want. He'd be back by 3 o'clock that day. Well, and he made a killing off of, when we was paying through the percentage-wise, he was making a killing. Well, when we sold the business, they went to hourly. And he would still load him up, and he would be back by 3 o'clock. And he wasn't even getting his 40 hours in. I'm like, dude, you need to slow down a little bit because you are killing yourself. And he would be the one of, I need more hours. It's like, you're the perfect employee for the percentage side of things because he just knew how to make it and work it and get it done. So
yep, and that's the guy that you want, right? And so, like, that guy is going to leave if you're paying hourly because he's going to look at that and be like, I'm the one that's getting done at 3 and doing the big schedule. You got Tim over here that does $400 a day by himself, and he dicks around and then he works, till 5 o'clock and complains that he's working too long. Like, that's the guy you want to leave. And if you, the one thing I've seen is if you switch to commission, you're going to lose half of your employees. It won't matter because the ones that stay will pick up their work and make more money, and you'll make more money. And so it's like it ends up being a win-win. It's a little scary at first, but
the beautiful thing about or percentage-wise is your numbers at this point. I know we're talking about bookkeeping and numbers, but that's a fixed number of 20. I did 15%, 15 to 18%. I know that my cost is 15% plus my payroll taxes and all the other crap goes with it. I'm at 20% labor versus. I don't know where I'm at the end of the day. You know what I mean?
Yep. Yeah. Well, that's the thing. That's what I mean. It's just totally like DeRisks your P&L right from the get-go. Is you like that guy that's getting done at 3 o'clock and making a ton of money. You want him making money. It's a very simple equation. The more money he makes, the more money you make. Like, there's nothing wrong with that. I've had some people be like, well, like, now I'm just paying him so much. Like, do I need to lower his commission? It's like, no, you can like raise his commission because it's so reliable, right? If you know that you get to keep 80% of every dollar he goes and makes, and he loves doing that, like, you have a match made in heaven.
Because he's going to want to make you more money because he wants to make more money.
Yeah, it's just, it's a very simple business principle. Is like the more you can get people aligned, win-win, right? Like, the more I can win and you can win at the same time, it just makes your business so much easier to run because you just have way less shit to deal with. But B, the decisions that you have to make are so much less frequent. You just don't encounter the same amount of drama or problems. And so it frees you up to actually like think about growing your business instead of think about managing these employees that aren't getting enough done in a day.
So since you have this is a good question here. What percentage is a good percentage for paying employees? And if you have 2 guys, how would you split that, or how do you split that?
Good question. So very much depends on your industry that you're in. Pressure washing, and I'll answer the second question first, which is you should think about the commission on a per truck basis. So as if you were like sending that truck out with 1 person in it, pay the commission per truck. In pressure washing, I'd say 20% commission is a good level. You'll find some people that will pay lower than that, some people that will pay higher than that. So that's like a good average level. And I guarantee if you pay that level, you will be successful. Like, yeah, you could probably save a few percent, but you could also justify paying a little bit more to try to get better employees too. So there's arguments both ways. I'll say in pressure washing, 20% is a good level. And that's a per truck basis. So if you're sending people out solo, which I would recommend if you can do it without creating safety issues, guys are just way more productive by themselves. You won't get the same 40% increase, but you'll get like a 20% increase. And I'll mathematically explain why. Even like if 2 guys work seamlessly together and don't dick around at all and one guy's not on his phone, you'll still get about a 20% productivity bump, regardless of how well they work together or, mess around and look at their phones. But if they're working by themselves, they obviously just have way less distractions. But I'll say if you've got 2 guys out there, one guy would be the lead. And so going back to that, you want to have 20% per truck. So maybe one guy's making 11 and the other guy 9, or some ratio like that, where you've got somebody that's a little bit more and has a little more responsibility. The reason why one person crews makes sense, and now safety always comes first. So it's not like we're going to jeopardize safety. And you don't, like, just because you run one person crews doesn't mean when there's a big job or there's a job that needs somebody to hold the ladder for this thing or that thing, you still send 2 people like to those types of jobs. Or send the crew that has a trainee, because the trainee is still going to be with somebody. But if you think about the number of drives when you send a crew of 2 out, so let's say you've got a route with 3 jobs on it. So 2-person crew is at the office. They go to job 1, that's 2 drives. They go to job 2, that's 4 drives now. They go to job 3, that's 6 drives. And then they go back to the office. So that's 8 drives, because you've got 2 guys in that car. And so 1 drive for each of them. So you've got 8 drives for 2 guys to go do 3 jobs. Let's make it 4 jobs, because then it'll be easier to split this up. So 4 jobs, you've got another set of 2 in there. So now you've got 10 drives. Now, if you send each of those guys out individually and they both just go do 2 jobs and then come back to the shop, each guy individually goes office to first job to second job back. So each guy has 3 drives. And if you total together, you have 6 drives. So 2 guys in the vehicle, you had 10 drives. 2 separate guys with 2 different vehicles, you only have 6 drives. So you have a 40% reduction in your drive time, basically. And driving, doesn't make you any money, right? The customer's not paying you to drive. So the routing might be a little bit different, and you could argue their drives might be a little bit longer. So it's not quite that simple, but like in general, solo crews, on top of that, they tend to just be more productive in the field, is what we've found. We've seen that in home cleaning and window cleaning, like kind of no matter what they're doing. If you send 2 people, their mentality, their psychology is they work as slow as the slowest person.
Well, and 2, also you're also going to be getting paid more. You're going to be paying the other guy more. So if you got one guy versus splitting 11%, now I'm going to be making 20% at that point. And
and it's all yours, right? You're not sharing it. So you have all the incentive to like run up the hill instead of walk up the hill back to the truck when you forgot something. Like, this is my time and my money. If it's you and another guy, like, now you're splitting the revenue, so you're not as motivated to hustle.
Right, exactly. And so, you're like I say, and we had guys that, like I said, Danny, he was an amazing employee. We could load him up no matter what he would, and he would be back and you would be done, And so that is definitely something that, you're going to get rid of the lazy guys at the end of the day too, because they don't want to work. So
for sure.
So talking about profit and loss and some things, what is a good number? So a lot of times we talk about our bottom line, which is profit. What's a good number for our business to be profiting on, either per job, per month, per week? What's a good kind of a good line to knowing that we're being profitable and we're not spending more than what we're making?
So there's 2 levels of profit that we need to think about. One is what's our gross profit, and one is what is our net profit. So gross profit is going to be the money that you keep right after you go do a job. So we talked about cost of goods sold being all the costs that you pay when you go out and do a job. So immediately you go do $1,000 job, and what do you have left? Like, you pay the labor, you pay for the supplies, you pay the gas. So in pressure washing, I would say you should spend about 40% of your money on cost of goods sold. So that's, like I said, labor, you're paying around 20% fully loaded, call it, between the payroll taxes and the workers' comp for the people and the uniforms that they're wearing. You're probably somewhere 25 to 30% for wages, which leaves you another 10% for supplies, equipment, fuel, merchant processing fees to collect the money, customer damages or repairs if you burn some plants, job-related costs. So that means $1,000 job, you spent $400 on those things. Your gross margin is the $600 that you keep. So you do $1,000 job, but you never get $1,000. You get $600, and then you got to think about your marketing spend, your admin spend, and your overhead spend, right? So admin spend, and if you're new and starting out and you're the one answering the phone, your admin spend is going to be super low. You're maybe paying a bookkeeper, CPA once a year type of thing, maybe a virtual assistant here or there. But I'll say as you scale up, you want that admin spend between like salespeople, customer service people, accounting people, your salary if you're taking one, to be at about 15% of your revenue. That's a good level to manage with. You can definitely get it skinnier, but like I said, I've seen people, because it's so hard to tell if your office people are being efficient. I've seen people get to like 20, 25%, and then they're like, where's all my money going? It's like, it's the lady that keeps saying she's really busy. She's at a computer all day watching YouTube videos. I mean, as long as she's watching your YouTube videos, it's fine. But
That's right.
yeah, she's watching damn cat videos. And then you got overhead expenses, and I'll say fixed and variable combined should be at around 10%. So now the profit, the net profit that you keep is after all your marketing expenses, your depreciation of assets, stuff like this. I'll say it's hard to pick a number there that is like, you should be hitting this. In pressure washing, 20% would be a good net profit level. But every dollar that you don't put back into marketing is just like handcuffing the future of your business, right? So like, yeah, you could make a 20% profit and that would be pretty comfortable. But the more of that you can sacrifice back into marketing to keep growing your business, the more profit you're going to make later.
So what is a good number for profit? How much should we be spending on marketing?
15% is like a good average level. So in the numbers that I was just laying out, so if cost of goods sold is 40%, admin is 15%, and marketing is 15%. Now in total we're at 70%, and then overhead, like I said, is at 10%. That's 80% of our money spent. That means we get 20% net profit margin. That said, like, if you want to get really aggressive, you could spend, of that remaining 20%, you could dump 15% of that back into marketing. Your marketing could be 30%. And early on, the more you can do that, the faster you grow, right? Like, our growth is purely a function of our marketing and our repeats and referrals. So the more we can do those things and focus on those things to grow our business, like that's what we were talking about earlier. Like, equipment doesn't make you money. The people do, but you don't get the work unless you're spending a bunch on marketing to get those people busy. The equipment will take care of itself. I mean, not maintenance-wise, but like you'll buy it because the work will be coming in, money will be coming in. So, I'll say 15% is like a good average level for marketing in our space. But if you're at 25%, don't feel bad. Just make sure that it's converting for you.
Right. No. And so I think that this has been a good talk here. We're actually up to about 107 people in here.
Man, people be loving that accounting stuff.
No, I think what a lot of people are really loving is the pay structure, talking about that kind of stuff, because honestly, we don't get a lot of people that understands that, and it is something that can blow your mind. And so talking about that, you do bookkeeping for people, is that correct?
That's what we do.
And so by that, what all do you all offer, and how would that help somebody, and kind of what kind of price am I looking for? What kind of price a month am I looking at?
So we start our bookkeeping service at $125 a month, and it goes up from there based on the level of activity in your business. So we'll look at the number of transactions you have and the number of bank accounts that you have transactions in, and we build our price up that way. I'll say, like, today we have a handful of clients that do, a few $1 million of revenue, and we don't have anybody that pays. We have one customer that pays us just over $500 a month. So in general, even for the guys doing $1 million, they're usually like a few $100 for bookkeeping. So I'd say it's super affordable in that sense.
You're looking at $1,500 a year, but at the end of the year, this is also going to help your CPA, that he's not going to have to pay you. You're not going to have to pay your CPA as much, because this is going to be like, here you go, here's all the information at the end of the day. Is that not correct?
Yeah, it'll definitely speed that up. I don't know if they'll give you a discount or not. You might have to negotiate that. That could be one of your fixed cost negotiations. But I will say the lack of good information throughout the year to make decisions with that's what's killing you if you're not doing bookkeeping the right way and having somebody that's staying on top of it. By all means, like 90% of the bookkeeping work, you don't need an accountant to do. The problem is the 10% that you need an accountant to know because you're making journal entries or you got to like understand the inner workings of QuickBooks. Like that's where things can get really hairy. QuickBooks is great. It makes things really easy. It also makes things really easy for you to screw up and not know it. And it doesn't tell you. So I mean, just like having bookkeeping help is great. I'd say what draws people to it most is that they just hate doing it. So therefore, like, it's great to delegate because A, you know, if you're not an accountant, it sucks doing it. And B, it's not the most fun thing for somebody that likes spraying water to jump on QuickBooks at night and be like, let me code these transactions. I'm going to love this work here.
So let's talk about this a little bit because not everybody uses QuickBooks. Can we use our CRM? Do we have to use QuickBooks? That kind of questions.
You know, you don't have to use QuickBooks. There's a lot of different options out there. I haven't seen a CRM that does a good job of it because that's just not what they're made for. You know, CRMs are made to interact with your clients and bill them and all that stuff. QuickBooks is great at doing your bookkeeping stuff, and it's so cheap. Like we get it for $20 a month. If our clients go buy it themselves, it's $40, but we're QuickBooks Pro, so we get it for half off, and then we just give it to our clients at that price. So for $20 a month, it's a very low cost software to have that data. And when we do it, like I was saying earlier, like we're in there on a weekly basis, getting all the transactions done. I was actually doing that tonight. I have a handful of clients that I'm onboarding, and so I was doing all their transactions tonight. So Monday morning they wake up and they just have like done books. They're good to go. They can look and see how they're doing. At the end of the month, obviously we reconcile everything to say, does the bank account transactions, no duplicates, and then we send all of our clients a P&L report that breaks down those 5 buckets I talked about. It has those exact percentage targets I talked about too, and it'll color code everything automatically to say you're either green, yellow, or red. You're green if you beat the target, yellow if you're like close to it, red if you missed it. So our clients get that report at the end of the month, and they don't need to know how to read a P&L. They just need to know if they're colorblind, then they can ask me, you know, which color is this, but they just need to see that and be like, okay, I'm high on cost of goods sold. What's going on? Do I have a problem here? Oh yeah, I bought that trailer and I loaded it up. Okay, like this month is high, but for the year I'm still doing good. So they see each month individually and they see the year to date. So you're gonna have spikes when you load up a new trailer and you're buying hoses and reels and this sort of thing and that sort of thing. But you can keep managing to that percentage throughout the year and like keep a good tack on how you're doing.
So we're getting to the new year here shortly, and hitting goals and that kind of stuff is some good things to do. Is this a good thing to do with the bookkeeping also, of hitting those goals or setting goals and to make sure that we're staying on track? And, you know, if we want to spend this much in marketing, but we're spending too much because we're not bringing that in. Is this something that we can use to help set our goals and make sure that we reach our goals?
Yeah, for sure. I mean, history is like the best predictor of future performance, or at least lets you know where you're messing up. So for us, when we look at next year, we first look back at this year and be like, okay, like I know Minneapolis, for me last year, my Minneapolis window cleaning business, our fixed costs were way out of line. We had too big of a space. Our rent was too high. We had interest expenses. And so like going into this year is like, all right, I know our cost of goods sold is good. I know how to protect that part of our P&L, but I have way too much fixed infrastructure. So that was like my winter project was I got to get our fixed costs back in line, back down to that 5% that I'm shooting for. So it just let me focus on the one thing that I really needed to like strategize around. To that point, one thing that I'm working on, and I don't have it done yet. We'll see how much progress I make this week when we're in Nashville. Probably not a ton.
You're not going to make any of them.
Yeah. Sure. Well, I have tomorrow, and then I have some time Friday maybe if I'm not out chasing deer. But I'm working on budgets that are pre-built for you. So it's not going to be based on what you think you're going to spend. It's going to be based on what you should spend. And so it's a target budget by every single line item in your chart of accounts that you should have. You might not have it, but again, that's something that we could help with. But basically, like, here's your pre-built budget if you're in pressure washing. And there's some, like, you can customize it and override it to your own stuff, but it's pre-built with how much you should target to spend on any given thing. So you just enter your sales and you're good to go. and I'm pretty pumped to roll that out here. I'm building the window cleaning one first, a couple tweaks, and it'll be a pressure washing one. I'm going to build a home cleaning one. I'm going to build a landscaping one. So everybody will kind of like have the, here's what I should be doing. And then are you doing it? And if not, you can kind of tweak it and adjust it to make it fit exactly what you're doing in your business. But at least I think that's back to your question of like, what should you be doing for next year? That if you're not building that budget, it tends to just like make you not focus on the targets next year, because what are the targets anyway? And building budgets is not the most fun thing in the world for pressure washing guys, right? So therefore, like, I'm just thinking my goal is if I can get everybody a budget and take that weight off their shoulders, that immediately gives them those goals for next year.
Is that, somebody's asking a question, is that a dollar or a percentage budget?
I'm building it based on percentages. There's a column for you to override it based on percentages or dollars. So if you type something in the percentage override column, it'll take that one. If you type something in the dollar override column, it'll override my target percentage and a percentage that you rolled in. It'll take that one. And it's going to have, I'm building, the reason it's taking longer than I thought is I have tabs to like build your sales budget just based on your marketing spend and your repeat percentage thoughts. You don't have to use it, but if you use it, that'll roll in. And same thing with how you pay your people. You could just say like, I want to spend 30% all in on my labor. Or you could say, I'm going to have this many trucks and this many techs, and this is my commission rates, and this is how many people I'm going to train each month. So I'm building that like breakout for somebody that like really wants to dive in and study their labor and build it out, and then that would roll in too. Same with purchasing vehicles and equipment and stuff like that. So trying to make it super easy to use, but also give some like added nerdery in there for people to get really nerdy on their business financials if they want.
Brooke Pressure Washing says, hurry up, Dan, finish mine.
Finishing everybody's, but I did tell Jeremy like, oh yeah, this is just for you, Jeremy, and nobody else is gonna get this. I'll start putting them out on our website here, hopefully by not this week, but the following week. I'm gonna start rolling them out. So yourblueskies.com if you want to stay tuned on that, and there will be a yourblueskies.com/Jay Guyman rolling out probably tomorrow.
Okay.
With some special deals for anybody that's watching this. So.
Awesome. Put archery hunting, smack them all.
Brown is down.
No, I didn't there. Give me back up there, Kyle. Let me see if I can scroll back up here. Oh, I got a tax question. I've been working under a sole proprietor, and I've totally reported every job, cough, cough. What should I expect at the end of the year for the jobs I've sent a W-9 in for? CPA.
I was gonna say that's very tax related. I mean, I kind of go about it this way, which is I just say report everything. Like, yeah, there's a small benefit in saving some money by not reporting it, but then you're still paying expenses with that cash too, so you don't get the expense benefit for tax purposes. And way more importantly is when you try to sell your business, nobody's going to pay you for revenue that's not on your P&L. So it's just thinking small by not reporting stuff. You're better off reporting it all and just like spending it on marketing. Like, that's the best tax avoidance strategy. Grow your business, spend it on marketing, then you don't have to pay taxes on it, and grow the hell out of your business instead of having to worry about that, because that shit's stressful. So I don't know. That's my 2 cents on it.
Unless you have a really good gun safe, just
I don't condone tax fraud.
No, I don't either.
I can't.
But awesome. So if I was a brand new person and I'm starting to do pressure washing, what are some things that, for the bookkeeping side of things, what are some good do's and don'ts?
Man, I'd say don't get a CPA off the bat. And you don't have to get a bookkeeper right away. Like I said, you can kind of do them yourself for a period of time, but there's going to be things that you'll probably get tripped up on if you don't have some accounting knowledge. I'd say don't wait too long to start giving yourself good data to make decisions on. I see people like, oh, I've got 2 or 3 employees. Like, should I get a bookkeeper now? Or I'm doing about $200,000 in revenue. It's like, man, you should have had a bookkeeper when you're doing 20,000 in revenue, like the minute you know that you're doing this thing and it's going to be a legit business, make sure you have good data, because how the hell are you going to grow a business without knowing what your numbers are? You're just throwing money in a bank account at that point and crossing your fingers. So like, don't get into the habit of running your business out of your bank account. Get in the habit of learning how to read a P&L. It's kind of one of those things like riding a bike, first time you do it, it's a little wobbly. And then after that, if you can look at that thing and in 5 minutes know exactly what you need to do, like, you're just so laser focused on doing the right stuff and just making so much more money that way.
Well, and it goes back to the whole thing too of do what you're good at. If you're not good at bookkeeping, pay it out and be done with it. That's that's stuff that I hate numbers. Numbers is I like numbers of $100. I like those numbers, but that's not a thing that I want to deal with at the end of the day, And so if you are trying to, do, and I understand sometimes we're on a budget, but again, a lot of times it comes back to being successful, making sure we're charging enough. And by having a bookkeeper, this will allow us to know that if we're being profitable or not. Are we charging enough so that at the end of the day, there is going to be profit at the end of the day? Is that not correct? Yep.
Yeah, I mean, and that's you see like all those Facebook posts about how much are you charging? How much are you charging? How much should I charge for this? And it's like the answer is very simple. Whatever the customer is willing to pay is like where you go, but you need to build your business in a way that you have the right operating strategy to fulfill what that client needs. Like maybe you don't need the $30,000 rig because your client's not willing to pay for it in your market. Maybe you do need it in your market. I don't know. But like, knowing how much money you get to keep after you go and do that service, there's just no substitute for that type of information. So yeah, it's like it literally informs every part of your business. And if you're not making decisions with it, you're just kind of guessing, really. You're
shooting up in the wind and hoping it comes back for you.
Yeah. So I think if I was starting all over again, the couple of things that I would make sure that I'm doing, like get QuickBooks going right away. Whether you're paying somebody to do it or not, just make sure that you're keeping track of it other than just your bank account. I say QuickBooks because it works great and it's super cheap. Use a CRM. If you're out there, I think everybody's using a CRM these days, I hope, but I've run into a few that aren't. There's no right or wrong time. Like, don't try to run a service business without a system that manages your clients. Pro tip, don't link it to QuickBooks. You don't need to. They won't tell you that, but it's a disaster if you link your CRM to QuickBooks, so don't do it. You don't need to, and it's not valuable. But like those two things from a managing your systems perspective, like get those things done, and then back to the first thing that we talked about is pay your people the way you get paid. Don't lose sleep over how much you get to keep when you do a job. Like, lock that in. It's up to you. There's like, your employees don't decide that. Your customers don't decide that. It's your business.
So let's talk about that. So when you say that, what you're really saying is if you're going to pay 20% per job, you pay yourself 20% per job. Is that what you're basically saying right here?
Well, so if you're out there doing the work, for sure, like pay yourself the replacement cost. Like, put yourself on the payroll. That way, when you fire yourself and you're just an owner sitting on a beach somewhere, you know what you have to pay. Like, you're built into the business model, right? So many people confuse profit with how much money they're getting to take home when they're just taking home a wage. They literally just have a job. So yeah, pay yourself a wage, run it through payroll. You're going to pay the payroll taxes anyway. We don't need to get into like the complexities of that necessarily, but pay yourself a legit wage for the work that you're doing. That way, when you have to hire somebody to do it, it's not like a big explosion in your business went off. Like, your business was built to pay somebody to do that work. Your time isn't free. Your time is super, super valuable and, the most expensive time. So for sure do that. But just back to if you get paid based on square footage or piece rate or some fixed way of your customer paying you, don't pay your employees hourly. Like, only pay your employees hourly if you're getting paid by the hour that you're at the job site. Take that risk out of your business, because that's where most of your money is going to go, is to that labor. So de-risk it as much as you can. And yeah, definitely include yourself in that labor if you're out there. Like, don't discount yourself, pay yourself.
That's probably the most important thing right there that I heard all night, because a lot of times we don't know how to pay ourselves. We just and also it allows you to understand that if you go to hire somebody, you're already paying yourself. You're just going to put that pay into them, and then you're going to have to find out where you're going to get
Yeah,
your
now
pay.
you got to go sell like crazy. You have to add value a different way other than spraying water.
Exactly.
Do we have so going in down that path? Do we have like 5 more minutes to get like some super valuable content here? I know you try to keep it around an hour.
We got all the time you want, Dan.
All right, so if you are, whether you're paying yourself or not, like through payroll, if you're making, and by making I mean your net profit, like after you pay your expenses. If your business is making more than like $20,000 in a year, and that could happen when you're making $50,000 in revenue or maybe $200,000 in revenue, depending on how you're set up. But if you generate a profit, and it's, this will be useful if you're doing $10,000 a year profit too, but like this incrementally goes up in value, is make sure, and we're 2 months away from the end of the year, make sure you are set up as an S corp. Don't just be an LLC. Be an LLC taxed as an S corp. You'll have a corporate veil. Like at Blue Skies, our S corp name is Ide Scott. It was the two street names that two of our business partners grew up on. It's meaningless, right? But all of our LLCs roll up into that, and we get taxed at that S corp level. So you have a corporate veil. Your businesses are still LLCs, but now you have a corporate veil. The benefit of it is now you have to take a payroll. If you're working in the business, you have to be on payroll. You're going to pay payroll taxes. What the mistake that you're making if you don't have that S corp is when you're just an LLC or sole proprietor, either way you're taxed as a sole proprietor. It's called self-employment tax. Let's stick with the $20,000. If your profit is $20,000, whether you distribute that money and put it in your personal bank account or not, you're paying payroll taxes on it of 15.3%. You're paying it as the employer and the employee, whether you take it out of the business or not, whether you pay yourself a paycheck or not. So don't fool yourself into thinking you're not paying payroll taxes. You're paying payroll taxes out the wazoo if you are not an S corp. When you become an S corp, then you declare a certain payroll, and if it's $20,000, maybe you pay yourself $10,000 a year or whatever. But you only pay payroll taxes on that payroll. You don't pay it on all $20,000, just on the half that you actually take as payroll. So incrementally, you can see when you're doing $100,000, maybe you pay yourself $50,000 salary. If you distribute that other $50,000, you don't pay payroll taxes on it. Versus if you're just an LLC taxed as a sole proprietor, you're paying payroll taxes on that whole $100,000. So I'm not going to try to do the math while we're live here, but like at 15.3% of self-employment payroll taxes, that's a hell of a lot of money if you're not an S corp, as you're gaining in profitability. So if you haven't done that yet, talk to your CPA like tomorrow about being an S corp come Jan 1, because you'll save thousands of dollars a year, like literally thousands of dollars a year right off the bat.
Awesome. That's that right there is some good information. Let's talk about one other thing, just because I know we're running over, but I talked on yours for an hour and a half, so you're just going to have to deal with it. So I usually try to be nice to my guests, but
they'll tune off if we're not doing a good job. Nobody's holding a gun to their head here.
I mean,
but don't go anywhere, damn it.
What do you charge for pressure wash starting up? So what if I want to sell my business? What makes it a profitable business? What makes a business so that I can sell it? What are some things that will help me sell my business if I want to? My goal is to grow a business and sell it. What are some things that are going to make my business worth something?
Man, good books are the first thing, because nobody will pay you anything for something that's not documented. So a good set of books. The biggest thing in there is the revenue piece of it. When our service businesses are bought and sold, they're often done so based on revenue. Certain cases may be based on earnings, but usually you end up getting bought by somebody that's already in the market, and so they're not as concerned about the rest of your cost structure. because they're going to bring their own in anyway, right? Like if you have 4 admin people and they're like, I already have an admin team, they're not going to use all 4 of your people, right? So they're going to look at it in their own lens in that case. It's really like the revenue side of it that they're going to be concerned about. That's going to be what they're buying. But they're going to look through all of your costs and just see if there's any massive red flags. Like, can this business be profitable if they're plugging it into theirs? They might not pay you based on all of those things, but they're not going to pay you anything if you don't have those records that shows that this can be a profitable business. And then they'll kind of go through and do their own analysis of each of those line items, if that cost is going to carry over to them or not. Definitely something that shows your client list and how often it repeats. So maybe if you have contracts, that's a huge win, right? Because you can say like, this revenue is locked in, right? We don't have any contracts. So we need to be able to show if we're going to sell a business that we have a 70% repeat rate, which means like, yeah, we did, $1 million last year. 700,000 of that's just going to show back up after an email. We're going to go get another 300,000+ by new marketing and growing that way. And here's how we did our marketing. But something that shows either contracts or repeats so that the client list that they're buying has value. Because if they're just buying revenue that you did before, but every client hated you and you burned them out and they're not repeating, like then they're buying a client list with no value, which means they're really buying nothing. Like when you buy a service business, you're basically getting a list of clients.
Some good junk equipment.
Yeah. And like the equipment might be included in that valuation, but we've like carved it out of a few of them where it's like, we already have enough stuff. We don't need your stuff. Like sell it on Craigslist, knock yourself out. But you're buying a client list and you're selling a client list and you're selling some equipment. They don't need to go together.
So Dan, I did $1 million. How much is my business worth? How much am I going to get paid?
I'll pay you $300,000 without looking at it. But I'd say in general, you get 30 to 50% of your revenue. And it'll be in that range, but depends on the type of clients that you have, contracts that you have, if there's any huge red flags in all of your expenses, or like contracts that you're locked in to pay something that is an atrocious fee, and that's going to carry over with the business purchase. But I'll say in general for a home service business, somewhere 30 to 50% of your annual revenue would be like, that's the ballpark you should be thinking in if you're buying or selling. The range that you're at in there might fluctuate just based on, if you're the only person in your market, that is a business somebody would want to buy because they kind of like lock in the space. Right. But other than some extreme situation, that's kind of the ballpark to play
because
in.
If somebody, and this is just something that a lot of people don't think, you're buying a client list at the end of the day. Can I start a business? So let's just say $1 million business and you sell it for $300,000. I can start a pretty daggone good business for $300,000 at the end of the day.
Yeah, if you pump that into marketing, chances are you're going to acquire a few clients. And that's like all you're doing when you buy a business. It's just another way of acquisition cost. So you should put it in the same lens of, should I spend $300,000 on Google AdWords? It's no different, right? You're just buying clients. Of the million clients, the $1 million worth of clients that you'd buy, not all of them are going to want to switch anyway. Maybe if you're in that market, they've already gone with you and there's a reason why they're using the other guy. Maybe they had a bad experience. Like they're not going to come back to you just because you bought that guy's business. So you're probably going to have some attrition there anyway. So yeah, it's just a client acquisition strategy. Is it, and therefore, does it meet your client acquisition cost? Right. If in general you want to pay no more than $150 a client for your business, but now you're doing this acquisition and you're paying this guy $300 a client, it's probably not a good acquisition. Like you're not.
So better off. So what does what do you mean by an acquisition cost? What does that mean?
So how many dollars you spend on marketing for every client that you get. And I'd say not just on like the Google ad itself, but on the person that's running it and managing it and the website that they check you out on and the Facebook ad that they maybe saw. Like you can look at acquisition costs directly by source, but also make sure you look at it holistically of like, what are all of your marketing spends in totality? And then how many clients. A good way to do it is just by month. How much did you spend in marketing that month? How many new clients did you get? Not necessarily repeats, just new clients. And that's how you would calculate your client acquisition cost.
And you want to say you want to keep it at how much?
It depends on your average job size. I like to, I know, back to our P&L that we were talking about, 15% would be like the marketing spend that on average we would do, but that's also based on the fact that we have a lot of repeats, right? So we're doing 15%, which means we're actually spending way more than that on new clients. And I would say we probably want to be at about 30% of average job size as our acquisition cost. So if your average job size is $600, you could spend $200 to go get that $600 client, and that's a decent acquisition cost. You spent 30% to go get them. At least you're going to basically break even in your P&L. You might not make money the first time you serve them, which is why you don't want to go over that $200 in that case, because if you have to spend $250 on the next lead or on the next client, like now you're starting to lose money when you go do that job. But you can pretty much go up to that point of diminishing returns where the next client isn't worth it. And then as long as you're getting some referrals and repeats out of them, like you're still at least making money on them that year. Or you're not losing money, I should say. So that's kind of how I look at it is your client acquisition cost is driven by your average job size, and it can be about 30% of your average job size.
Awesome. So we're getting here. We went way longer than an hour, but that's all right because that was some gold information right there.
Accounting is just too fun, man. How can you stop?
I don't think it's fun at all, but that's not my thing. But again, I think that it is very important. I think to grow a business, it is very important to know this stuff. That's why I'm wanting to get all those terms out there of what is an acquisition cost, what is that kind of stuff, because a lot of times we don't understand what that is. Some people might not even know what the word is. And so that's why I wanted you to break it down a little bit further, because I want to make sure my 100 people, 87 people in here understand that stuff. And so, that is very important at the end of the day, because
that just goes back to why you need a good bookkeeper. Like if somebody's getting things into the right spot for you, you can really quickly figure out what that acquisition cost is and know when something's working or not working, or when to change it, or when to pull the plug on it, or when to do more of it.
Right.
So
because if we know that stuff and it works, we can put the gas down on it and we can throw more on it at that point. But if it's not working, then we need to look and reevaluate.
Yep. And that's, therefore, not that the accounting and the bookkeeping is the fun part of it, but like spending our money on marketing is like the most fun thing we get to do. The equipment's like, it's kind of our toys. I get it, but it doesn't make us money. The marketing makes us money. Like that's fun to nerd out on and make sure we're crushing the marketing.
Marketing is more important than anything at the end of the day. And I preach that all the time. We can have the most nicest equipment. I've seen it. The most $20,000, $30,000, $40,000 equipment, and it don't make you a dime at the end of the day. I've seen many people sell that same rig for half cost because they couldn't make it on the other way.
Yeah, the customer doesn't know what the hell it is, and they don't really care as long as the outside of their house is clean.
Exactly. And again, we're just doing customer service, and we just happen to be spraying water at the end of the day. So.
Yep.
Awesome. Sure. Well, I appreciate it. Give me the web address, and I'll put it in the notes later on, or after I get done with here, where people can find out about you. Also, you got a pretty cool channel. It's kind of funny. Give us that information too.
So we have Bookkeeping Beer and BS. You can go join that group on Facebook. I'm getting the YouTube channel started. So there's a YouTube channel out there too, but it doesn't have much content on it yet. But definitely join our Facebook group, Bookkeeping Beer and BS. We go live every Wednesday night, or at least most Wednesday nights at around 8 Central, 9 Eastern. We drink beer. We talk shop. It's not it's bookkeeping because it has alliteration properties, but we kind of talk about all business things. And at the end of the day, all business things come back to, are you making money or not? So that's how we weave it in. If you need bookkeeping help, or if you want that budget sheet that I was talking about that I'm pre-building for Jeremy Brook, but I'm going to give it to everybody else too. I'll have that. I'll start rolling those out next week. So check out Bookkeeping Beer and BS, because that's where I'm going to be like talking about it. But it'll be on yourblueskies.com is where we'll make that available. And tomorrow, It might even happen tonight, but I don't want to promise tonight. There will be a yourblueskies.com/Jay Guyman, and we'll give like some cool offers and half off setup fee stuff. If you need help with bookkeeping, buy it that way so you get a better price because you know Jason. So there you go.
Awesome. Alan Hanford put pros versus Joes is great. So
I think we just released our window cleaning one. That was our last one. We have to film the holiday light one, but we were waiting until it got colder. I wish I didn't realize it was going to be 30 degrees now. So we got our holiday light pros versus Joes to film. That'll get done in the next couple weeks here.
Awesome. Well, I appreciate for having you on here, and I know we went a little over, but that's fine. We got a lot of information out. And so again, go check out Dan Plata at BBB, Bookkeeping, Beer, and BS, and we'll see you all later.
Awesome. Thanks, Jason. Appreciate you.
Yeah.